If you're in need of extra cash, secured loans could be a potential option, but it's important to weigh up the pros and the cons. In this guide, I'll explain secured loans and provide you with a comparison of the best options available. I've got to stress how important it is to put thoughtful consideration into your decision when contemplating secured loans. There are risks to mull over when your assets can be used as collateral. Secured loans can come in various forms, it just depends on your specific needs. Secured personal loans are typically secured against assets like your house or your car, providing you with flexibility which tends to give you options to better rates. Home improvement loans are tied to home equity. These loans are specifically designed for funding home improvement projects, providing your property as collateral. Second charge mortgages are also known as home equity loans or HELOCs, and they give you the opportunity to leverage home equity as a way to release cash. These loans involve a secondary charge on the property. Debt consolidation loans are aimed at helping borrowers settle other debts, and these loans can be secured or unsecured. It just depends on what works best for you. Guarantor loans can help if you don't have personal assets for collateral. These loans use your guarantor's home as security. Let me explain how secured loans work. In simple terms, secured loans provide you with a lump sum, which is then repaid over an agreed period through monthly instalments. It's important to be aware that opting for early repayment may incur additional fees. But the main point to consider is if monthly repayments become challenging. Open communication with a lender is paramount, as negotiating new terms can often make repayments more manageable. Ignoring financial challenges may lead to payment defaults, which could then affect your credit score, and it puts the asset that you listed at risk of repossession and sale. Let's get into the difference between secured and unsecured loans. Well, the big one that stands out is collateral. As you know, secured loans demand collateral, providing lenders with a way to retrieve their money in the event of defaults. Unsecured loans don't need collateral, but non-repayment may lead to legal action, potentially resulting in additional costs and repercussions. Now let's get into the advantages and disadvantages of secured loans. Here are the pros. Secured loans often allow borrowers to access larger sums compared to unsecured alternatives. With collateral mitigating risk for lenders, secured loans often come with lower interest rates. Collateral provides security for lenders, which makes it easier if you've got a low credit score to secure a loan. But now for the cons. The biggest risk involves you losing your asset if you can't afford the repayments. Secured loans typically require property appraisals and additional checks, extending the approval timeline. Now, lenders might set rigorous conditions, and a failure to stick to them could result in serious repercussions. There are various ways to find a secured loan. Traditional banks often offer secured loans with lower interest rates, providing a secure and familiar option. It's also important to make sure that the company is reputable and has good reviews. Building societies, mortgage specialists, and supermarket finance departments also participate in the secured loan market, and they all have their own unique offerings. Understanding interest rates is crucial when considering secured loans. Rates depend on the borrowed amount, with generally favourable rates ranging from 2% to 5%. It's essential to recognise the distinction between a fixed and variable interest rate. Both of them have their own implications. There are various factors to take into consideration when determining the best secured loan. You shouldn't just solely focus on interest rates. Take a look at closing costs, early repayment fees, appraisal expenses, and additional administrative costs. Using third-party comparison websites offers an overview, but it's really important to do your own independent research, and you can get a spreadsheet as well, just so that you can do accurate comparisons. Secured loan calculators are available on lender websites. They make it easy for you to estimate monthly payments and overall costs based on the amount of loan you want and the repayment period. Secured loans present a viable option for accessing substantial funds, but the decision to opt for a secured loan means that you have to take a lot of careful consideration about the associated risks. Choosing the right lender is really important. Borrowing responsibly and assessing the ability to comfortably repay are the key points. Before committing to a secured loan, it's important to find out how much you can get and how much it'll cost without hurting your credit score. I've partnered with a company who can provide a free quote so that you can start to understand what's available to you. Fill out the form for a free quote and I'll leave it below this video for you. If you use this link, you'll also be supporting Thrifty Family, so thanks.